Hello and welcome to Last Week in Finance. Today is Sunday, June 13th. So let's start with the numbers. The S&P 500 up almost half of percent point. Right now the S&P and yet again another all-time high, 4,247 points. The DXY, the US dollar index, up for the week also slightly 0.41%. Right now, the DXY it's at 90.51. Gold down for the week actually. It was kind of surprise. 0.77% for the week. Right now, the ounce of gold is at $1,879. Although silver actually went up for the week, 50 basis points up. Right now, the ounce of silver it's at $28.05. Copper keeps in a bullish trend, 0.79% up for the week. Right now, the pound of copper is at $4.55. Of course, the crude oil it's the news lately. More than 2% up for the week is over the threshold of $70 per barrel. Right now, it's at $70.78 per barrel of crude oil. The yield of the 10-year Treasury bond up way down for the week, more than 10%. Right now, the yield is at 1.453%. And what does that tell us? The market keeps bullish, very bullish. So we haven't seen a sell-off of the bond. Basically, it's very strong. Maybe repo operations or just the markets that are bullish on the bond. Okay, now with cryptocurrencies, Bitcoin down for the week, slightly down, 0.48%. Right now, Bitcoin is at almost $37, 36,892 to be accurate. My last measure, and Ethereum, yes, went way down. Right now, Ethereum is at $2,468. Okay, now with the news. The jobless claims report is at 376,000 new jobless claims on the United States. The expected target was at 370K. So I mean, slightly on the ball. It still is on a bearish trend. The weekly jobless claims have been coming down steadily down, and let's see how long it's gonna keep this trend. I hope goes to maybe on the 200,000. That will be good and stay there. And of course, the big news was the inflation report, the CPI. Oh, it's at 5% year over year. It's a 13-year high. Just, and you guessed it, way just right before the GFC crisis. So what does that tell you? Tells we are either on a permanent cycle of inflation or we're just at the peak of another very huge market correction. So I'll leave you two guys to decide which which is what. And okay, now for the main topic for this podcast, it will be the last case for deflation. And I know, guys, that I always talk about inflation, that I kind of a fear monger on that area because I'm fucking afraid of a very high inflation. I'm not gonna sugarcoat it. Although, having said that, I'm on deflation camp, but it's been very hard for me on the last few weeks. Now, I'm gonna say this in this episode, and I'm gonna leave it like that. I'm gonna expect more results because the thing is, I'm losing the faith on this, but I still expect deflation in the United States. Why? There is three main issues that contribute to deflation, and talking all around the world, especially with the United States having the world's reserve currency. And here it is. First is technology. I mean, I know that things seems very bad in the last few years and last few decades for most people, but we had great technological advances. I know that we haven't seen robots or flying cars or something like that, but I mean, in your smartphone right now, you have a lot of applications, a lot of things that you can do using your phone, using the internet that you were able to do a few years ago. I'm talking 10 years ago. 10 years ago was nothing. Um, right now, and all this process that you can do it very conveniently, very simple, very efficiently, using your phone, using your computer, using the internet, all those processes are deflationary because you're doing things more efficiently, using less manpower, less brain power, and a better use of your time, both of our times, and that makes things more cheaply. And and this thing apply to this big corporation because they have better software on logistics, supply chain, production, construction, industry overall, whatever. And all that technology is deflationary, makes things more cheaply in the grand scheme of things. Okay. The second thing is that when you're on an environment there is very high on debt, there's a lot of debt in the system. I'm talking public debt, corporate debt, non-financial debt, any kind of debt, student loan debt. That is it's a deflationary nature itself. Why? Because when you have debt, you can go and have more discretionary spending. You have to pay your debt first, or else will be consequences. So, having said that, the United States is right now over 130% debt to GDP. That's more than 28 trillion US dollars and 120 trillion on off-balance sheet debt for the United States. And you have Medicaid, you have the FDIC, you have a lot of off-balance sheet obligations that the United States government has to serve. And most of these obligations, or well, at least many of those off-balance sheet obligations, are on services, not on money itself. So if the government creates high inflation, those off-balance sheet obligations also are gonna increase. So keep that in mind when you see all these inflation, hyperinflation, which is ridiculous. It's not gonna happen in the United States. Okay, the last thing is that United States, of course, has the world's reserve currency. There is a lot of demand around the world outside United States for dollars, for oil. For most of the countries that produce oil and export oil, they want to be paid in dollars. Most of these countries have weak currencies. And of course, maybe they can take euros every now and then. We're not gonna go way that. Other thing is, many people around the world, they like the US dollar. And they don't see how the United States dollar can lose that privilege, that status. Because most people around the world, their income is denominated in weak currencies. pesos, liras, you name it. And they like to save in US dollars when they can. And they have a lot of trust on the system. I know that you may be listening to this from the United States and you see everything is going down to the toilet. But around the world, United States is well recognized. Is a very good. Is seen in a very good way. They're very positive. Unlike China, unlike Russia, uh, even unlike many of the European countries or Southeast Asian countries. So keep that in mind, and that's good, and that is deflationary. Although, here's the main issue. It's not the Fed balance sheet, it's not the repo market, it's not the Treasury Department. The thing is, they can do whatever they want, but if they break that conference confidence level on United States, now it's gonna go down the toilet. So keep that in mind. I still not very long. I'm not that faithful in that I was a few months ago, but I still think that we're gonna have is deflation, at least disinflation, and a market correction. That's what I think. It's not about certainties, it's about opportunities, probabilities. I think it's very likely, but I'm not 100% sure, so I'm gonna leave it with that. Now I wanna close with the real estate market. First, what I'm reading, what I'm seeing is the market still, very the prices are still high, especially in in these markets like South Florida and Austin, Texas, and some outskirts of the main cities. Okay, what I'm seeing is a little bit of a slowdown. There is few supply because not many people are selling their homes, but I'm seeing also few demand. Of course, we have a few demand, and in that demand, people are bidding for open houses and whatever over the market price. Okay, I get it. But construction should resume their normal operations. Supply eventually is gonna tick up, maybe not much, but it's gonna tick up, and demand is gonna tick down. And that should at least keep down the market not as high as we're seeing in the past, let's say, 8 months. So keep that in mind. That's in the United States. Also, lumber took a hit, 70, almost 80, 18% for the week, and 25% month over month. Remember, lumber prices were at 1,700 around 6 weeks ago or so, and right now are slightly over 1,000 per 1,000 square feet of I remember board. I don't remember the metric, but went down almost around over 40% since that all-time high. And apparently, and I'm watching these channels where they talk about lumber and construction, apparently the supply is is going back to stock and prices are gonna keep coming down. Maybe not at the price of 2019, but it's still gonna keep ticking down and should be in the new normal of 400, 500, maybe $600. That's where I'm listening, that's what I'm seeing, and I think it's very likely to see lumber prices around 500 and the midst of 500 should be the ball game. And now to close, I want to close with the Canadian real estate market. Apparently, unlike the Americans, unlike the American real estate market, Canadian it's very hot. It's quite hot and keep going up and up and up. Apparently, the Canadians are not only increasing their population, also they're increasing their migration, and of course, that is bullish for the market because these people need places to live. And of course, most of these people are taking the hit of not living in the big cities like Toronto or Vancouver. They want to go maybe to smaller cities, maybe more on the north, and gonna keep. And apparently, the trend is the Canadians are gonna keep developing those areas far away from the United States border because around, I don't remember exactly the number, but it was 60% or 70% of Canadians live within 100 kilometers of the US border. I mean, it's the south of the country, the south of Canada. And the rest of the people, around 30%, live on this huge territory, this huge empty territory above the 100 kilometers of the United States border. So apparently, the project, I mean, for the developers and home buyers and future home buyers, is to develop and buy houses way of the north, maybe far away, at least not as close as we're seeing right now from the American border. So that's what I'm seeing from Canada. If you are from Canada, please let me know. I'm gonna keep tracking the Canadian real estate market. That will be all for the week. Thank you again for listening. Hope you have a nice week, and we will see you next week. Bye bye. Take care.